welcome to MF Corner on CNBC-TV18. I'm Vinny Motiwala and with me Sonal Butra as well. Sonal, good afternoon, and like we were saying, right, so many queries that have come in, some though even we have which we're not asking people yet, but at least some of the queries are going to get answered today. We'll try and cover as many as queries that you all have sent us. So that is what we are focusing on, solving all your mutual fund related queries. And to do just that today, we have Kshitiz Mahajan, co-founder of Complete Circle Consultants, as well as Rushabh Desai, founder at Rupee with Rushabh Investment Services, to answer all those mutual fund queries. Kshitiz as well as Rushabh, good afternoon and thank you so much for joining us on the show. Let's get started with that first query for today. We have Don Francis who's writing to us from Kerala. He says that he has been investing monthly in Nippon Small Cap Growth Fund, and this is for about last 9 years, and his absolute return has standing at currently 192%. He also says that all analysts are suggesting now that maybe small cap and mid cap are overvalued compared to large cap funds. His funds has a portfolio of around PE ratio of 48 and wants to know whether he should keep investing or switch to some other fund. Kshitiz, let me start this one with you.
Hi, Vinny. Hi, Sonal, and hi, Rushabh. Everyone, hi. And I believe if he's having only this going in a small cap fund, then I think this is a time he should diversify, because he already has a corpus which is in small cap, and small cap has done well. We have all seen there's a re-rating happen from 2021 to 24, and yeah, valuations are high, and it's a very well diversified portfolio. Samir is doing a great job. There are more than 215 stocks right now. But if it's only small cap, then I think he can actually shift some gears from small cap to flexi cap and some other categories, large and mid cap. That's how he should look at it, because it's one category risk which he's carrying. At the same time, small cap and mid cap as a category is bound to go through a drawdown which is on a higher side vis-a-vis a flexi cap category. So I think one can look at diversifying portfolios and further allocation towards he can make towards Aparag, Parik, or ICFC. I'm just, for example's sake, any flexi cap or a large and mid cap category fund. That's how he should look at, so that he shouldn't have a single fund or single category risk.
Okay, take that point, Kshitiz. Rushabh, let me come to you as well. What's your take? Should there be a shift in the portfolio? I've been investing in the Nippon Small Cap Growth Fund for about 9 years. The returns are fabulous too. What's your suggestion here?
Hi Sonal, hi Vinny, hi Kshitiz, hello everyone. I think I more or less agree with what Kshitiz had to say. Like, if he has just one fund in the portfolio, then it definitely makes sense to diversify a little bit in the multi-cap space or the large and mid-cap or the flexi-cap space. But if he has a basket of funds already in his portfolio, and Nippon India Small Cap is one of the funds, one of the other funds in the portfolio, then I think just continuing the SIP till his time horizon makes more sense. Mid and small caps are a bit expensive. Answer is a yes, but we are not yet in a bubble, so I don't think there is something to be really concerned of. See, we are already in a time correction since past 1 year, 2 or 3 months or so. So there is ample of margin of safety. We have not yet fully recovered, and the bull rally is yet to start. So I think there is still good amount of margin of safety left. So I think number one, diversification is the key. And number two, I think continuing the SIP till the time horizon is also something what I would recommend.
Okay, thanks for that recommendation there. But let's move on to the next query. We have Gautam Mohuri, who's writing to us from Mumbai. He wants to know the best way to buy silver and copper via mutual funds. How should they go about it? Kshitiz?
So there are a couple of options, Vinny. You can always have a multi-asset fund which are investing into gold and silver, both. There are categories of funds which are available across asset management companies. Second is you can buy ETF. If you have a demat account, you can directly buy a silver ETF. And if you don't have a demat account, then you can look at buying, if you want to buy a direct silver allocation, you can look at buying a fund of silver, which has been offered by 3-4 AMCs. You have Access, you have Reliance, Nippon, you have many other AMCs. But there is another category now which has come up. This is very interesting, Vinny. You can have a combination of gold and silver. So there is a category offered by Mirai and a couple of more names, where a fund manager is taking a call how much gold or how much silver he want to keep. But if you want to buy a pure silver, then there is an ETF or there is a fund of fund. If you want to leave this to a fund manager to decide what category he can look at and how much silver you should have in the portfolio, then it's a multi-asset fund. And if you want to buy a commodity fund, then there is a fund of gold and silver, where a fund manager takes a call how much gold or silver you can keep in the portfolio. Right now, let's say, for example, Mare is having 71-72% gold and 28% silver, just for example's sake.
Take that point, Kshitij. These are some helpful names which will help diversify portfolio into silver and copper. Let's go to the next query. Shubham is writing to us from Noida. He's seeking expert advice on educational planning for his 3 children. Says that a private professional degree currently costs approximately 25 lakh rupees and his goal is to cover similar future costs for each child. With a moderate to high risk profile and existing insurance coverage, wants to know the mutual fund plans that would be suitable for a SIP. Well, first of all, I would like to congratulate Shubham for planning for education already, because I have a daughter. I've already started doing that. She's just 9 months, so I can understand how expensive it has gotten to fund for education. So starting early is the best way to go about it. Rushabh, what's your take here?
See, a professional degree will cost somewhere. It depends on which university and the geography. But on an average, I think he's got the cost little bit correct in India. So around average of 25 to 40 lakhs is the average cost what one can put at in India. But if he's looking to, to take an education somewhere abroad in the US, then at least a minimum of $100,000 which is around close to say like a crore of rupees would be the starters for an annual cost. So let me give him a little bit of an perspective. See, the present value of 25 lakhs is not going to be the same after say 10 or 15 years. Okay, the average education inflation in India is around 10%. So if I just do a 10%, add an inflation to the 25 lakhs, it's adding up to around 64 lakhs to a crore, depending on the time horizon. Say like 10 years is 64 lakhs, and after 15 years it's going to be a crore. So for all of his 3 children, it's after 15 years it's going to be 3 crores. So I think the best way is to start early, as you also correctly mentioned. So I think doing an SIP of 30,000 rupees per month for each of the children, I think should do the job. So I think around a combination of say around 60%, 60 to 70% around flexi cap strategies, 20% mid caps and 20% small caps should do the job.
Okay, thanks for giving us a breakup there, Rushabh. Kshitiz, coming to you, anything specific that you would like to add here? Given that obviously age of the kids will also matter, right? At different stages, they may be at different, time they may require that money. Then what kind of funds also that one could look at? Rushabh did mention some breakup. Any specific fund names also one could look out for? Kshitiz, I think you're on mute.
My apologies. I think it seems like kids are young, so they can have a good mix of a flexi cap, your HDFC or Parag Parikh larger mid cap, where you have good names like Kotak, Motilal, Mirae. A mid cap and small cap can also do, because the goal is more than 10 years away. So it's a good combination of 4-5 names. But I'm saying let's make it simple. I think if you can have a SIP of 13,100 rupees for next 15 years, I'm assuming if the kids are 3 years of age, they can have a corpus of around 63 lakh. But there are 3 kids. So he can have a step-up SIP of 7,100 rupees, which is like 10% step-up every year. Again, he can or she can achieve that corpus of 63-64 lakh rupees in 15 years. So step-up SIPs really work really well, if you see. So let's not get stressed, about that. You have 3 kids. I think start investing, and as and when you have add-ons, or as and when you have your salary getting increased, just keep on stepping up the SIP, and you'll see the magic of compounding coming your way.
Oh yes, stepping up SIP. This is something we talk about SIPs, but stepping them up is another important aspect of mutual fund investing. A very interesting take by both of you gentlemen, but we have to take a quick break. When we come back, we'll address all the queries that have come from our viewers on the other side of the short break. Welcome back. You're still tuned into MF Corner, and we are answering all the queries which have been sent in by our viewers. Let's get to the next one. Nandagopal is writing to us from Chennai. He's running a private nursing home in Tier 3 city in Telangana. says he has invested in 4 active mutual funds and has accumulated a decent corpus. He wants to reduce the risk of single market and start investing in DSP mutual fund. Please advise. Kshitiz, what's your take? Should this one focal point in terms of mutual fund is a good way to go about investments?
If it's an add-on fund, I think it makes sense. Not a single fund, and moreover, you're talking about a global fund. I think there's so much of opportunity. Apologies, in India itself. So I think you can have this as a tactical allocation, 15% in the portfolio. And I agree, if you have plans, wherein you have plans to send kids abroad, you need some return in which is dollar linked. I think then it makes sense to have a global fund in the portfolio. But many of the global options right now are not taking fund. But yes, there is ICICI. There is a fund from ICICI which is available, and DSP they have closed this fund. There's an opportunity which is there. There's one good opportunity in China also, because I think China as a market is at 44-45%. If you see market cap to GDP per se, where India is almost at 105%. So I'm saying this is my view. There's no recommendation, but you can view all the available option, but this can be 5-10% in a portfolio. As a country, I think we are very well poised, and diversifying is good, but on a maximum side, 10% is what I will say.
Okay, let's move on to that next query then for today. We have Dipti Prakash Das, who's writing to us from Mumbai. She's been investing in mutual funds via SIPs for the last 5 years. Her aim is to build a 2 crore rupees corpus in the next 10 years is what she wants. And she wants to know if her existing SIP amounts are correct to achieve her goals, or if she should change or modify in terms of her funds as well. Obviously, she's given a lot of names like SBI Focus Fund, SBI Flexi Cap Fund, Blue Chip Fund of SBI, Access, she has some Blue Chip Fund as well, and a couple of names that we've shared with you all. Rushabh, what should she be doing now? You know, given that she has this amount coming in, is it enough? Does she need to increase? And if yes, then how should she go about it?
Vinny, first of all, let me come to her portfolio. I understand what I'm reading in front of my screen is that she has around 12 to 13 mutual funds. I think that's way too much. Number one, I think she needs to consolidate her portfolio and just keep up to 4 and 5 mutual funds. I think 4 to 5 mutual funds is perfectly fine, because every mutual fund is going to invest anywhere between 40 to 70 stocks. So keep your portfolio clean and simple and minimize. Keep only 4 and 5 funds, 4 to 5 funds. Number two, what I understand is that she has multiple funds from the same AMC. So it can lead to underperformance risk. We have seen that a single AMC having multiple funds have underperformed together, whether it is large cap, mid cap, small cap, multi cap. So I think to reduce underperformance risk, I think she needs to diversify across different AMCs as well. Thirdly, what I can see is she has multiple small cap funds, which is also not recommended. I think one small cap fund is perfectly fine and should do the job. So following is my recommended portfolio for her. Number one, keep Parak Parekh Flexi Cap. This is a new fund which I'm recommending to her. Number two, HSBC Value Fund. Again, this is a new fund which I'm recommending. Number three, Kotak Flexi Cap. This is an existing fund which I'm just picking and putting in my recommended portfolio. Number four, Edelweiss Mid Cap Fund. This is a new fund. And number five, SBI Small Cap Fund. Again, this is an existing fund. So just keep 5 funds. I think it should do the job. These 5 funds will diversify across different market capitalization, different AMCs. And most importantly, it will diversify across different styles as well, which is growth and value. Now, coming to her goal particularly, see, I'm understanding she's doing 21,000 SIP and her time horizon is 15 years. My apologies. So at 12% compounding returns, a 21,000 monthly SIP should give her around 1 crore of rupees. Okay, she's not going to be able to achieve 2 crore of rupees. So if she wants to achieve 2 crore of rupees in the next 10 years, I'm understanding she's already investing since past 5 years. She needs to do an annual SIP top up of anywhere between 30 to 35%. So if she does not do this annual SIP top up of 30 to 35%, she won't be able to accumulate 2 crore of rupees.
Okay, so there is a top-up required in terms of annual SIP in order to achieve that 2 crore mark that the viewer wants to achieve. So that helps in terms of the confusion she has about her portfolio allocation currently. Let's go across to our next query. Viresh is writing to us from Karnataka. He's been investing in mutual funds for the past 1 year, wants to exit the Aditya Birla PSU Equity Fund and increase his SIP amount in the Quant Small Cap Fund to 5,000 rupees per month. He's also planning to start new SIPs in the Motilal Oswal Mid Cap Fund and the ICICI Prudential Large Cap Fund with 5,000 rupees per month in each fund. Wants to know whether this is the right choice. So we've been getting a lot of queries with focus on mid caps and small caps. Maybe that interest is coming back into the category, but we'll understand that over time. Kshitiz, your take on this particular query?
Well, obviously, whenever we allocate or we do SIP, it should be linked to your goal. Mid cap and small cap as a category should be linked to your long-term goal, which is in excess of 10 years, because they are much more volatile. They're subject to much more drawdowns vis-a-vis flexi cap category. So idea is that if you have your goals, when you're doing your SIP, anybody who's doing a SIP, please align it with the goal, because one, you have a discipline. Till the time you will not achieve the goal, you'll not stop that SIP. Second, you already have a small cap in the basket and you have one fund on a flexi cap side. I think add couple of, as you're saying, you're adding large cap, add one more flexi cap on the basket side. You already have a small cap in the basket. At portfolio level, you should be 50, 30, 20. That's what I'm saying. 50% on large, 30 mid cap, 20 small cap. Normally, we confuse this with the fund allocation. It should be on a portfolio basis, because on flexi, large cap also you get mid and small cap allocation. So I think you already have a small cap, and if you are young, because age is not mentioned, if you are between your 30s, then it makes sense you can add mid cap. If you're more than 40, I think a flexi cap option will be, on large cap option will be a better way of achieving your goals.
Sure. Okay, let's move on then to the next query. We have Bhuvan Sharma, who's writing to us from New Delhi. He's looking to invest in Tata Hybrid Equity regular plan and wants to know if it's a good option or if we could look at some other options in hybrid side. Rushabh, your view?
Vinny, unfortunately, I'm not a very big fan of the aggressive hybrid category. There are two specific reasons why. See, number one, it's a little bit of a rigid nature and the asset allocation is quite static. So in an aggressive hybrid fund, the fund manager needs to be invested in pure equities anywhere between, say, 70 to 80%. And the rest is allocated to debt and arbitrage. Okay. So I feel that, rather than going for an aggressive hybrid fund, you might as well keep your equity and debt portfolio separate from a better risk and return mitigation, right? So if you want a aggressive hybrid kind of an asset allocation, so probably have a separate 65, 70% or 80% equity portfolio and keep the rest into pure debt mutual funds. Now, if you're looking for a hybrid category or a hybrid product itself, then there is a beautiful category called dynamic asset allocation category, which is also known as balance advantage fund. I think it's much more flexible in nature. The fund manager has liberty to maneuver between equity and debt in a much more flexible way and in a much more aggressive way. Also, of course, there are conservative dynamic asset allocation funds as well. And at the same time, there are aggressive dynamic asset allocation funds as well. So if he's looking to venture into kind of an aggressive hybrid fund, I think then going into a dynamic asset allocation fund, I really like Edelweiss Balance Advantage Fund, which is very much on the aggressive side. I also like HDFC Balance Advantage Fund. Again, that's also a product which is on the aggressive side. But I would still choose dynamic asset allocation funds, keeping the flexibility and liquidity in mind.
Thanks for that, Rushabh. But let's go to the last query. We have around 1 minute left on the show, so let's quickly get that out of the way, Kshitiz. Kaushal writes to us from Bengaluru. He's looking to invest in international funds, wants to know if it is advisable to look at fresh investments in international mutual funds with Europe and China exposure, as well as US for now.
Yes, one should look at having 5 to 10% exposure. One way is you can get into Parag Parik, which has 20% allocation toward international stocks. Second is, yes, there is ICICI US fund, which you can participate. And third is, as I said, China looks, but we can gauge China looks much reasonable. 10-year return is hardly any in Chinese market. So one can look at participating into China fund, to advise China fund. Please do your due diligence before getting into it. And maximum capping should be between 7 to 10% when you allow or when you invest into an international portfolio.
Okay, all right. Take that point, Kshitiz and Rushabh. Thank you so much for joining us today and patiently answering all those queries. Actually, we are left with a lot more. So I think we'll take them up some other day because there's been a lot of interest in individual names and their portfolio allocation as well. So thank you so much for your time today.
Thank you.
All right, with that, we'll take your leave on this edition of MF Corner, but do stay tuned. We do have closing bell to take you through the last hour of trade.